In 2026, could a $100,000 fine sink your fintech app? Picture losing investor trust overnight because you mishandled user data under the CFPB's new Rule 1033. Fintech is fast, but regulators are moving faster. From AML to cybersecurity, the compliance bar keeps rising. Being compliant isn't about ticking boxes. It's what earns the trust of users, partners, and investors. This video reveals the key areas your business must master now to avoid that 2026 nightmare.
Welcome to Strategic Ledger, your go-to for cutting through the noise of finance and tech. Today, we're tackling a monster topic: fintech compliance in 2025, rules, regulations, and risks in the USA. If you're building a payment app, a crypto platform, or a robo-advisor, one misstep could cost millions in fines or even shut you down. But don't stress. This guide is your blueprint to stay compliant and thrive in a $1.5 trillion market. We'll unpack 2025's regulatory updates, real-world case studies that hit hard, and strategies to keep you ahead. Smash that like button if you're ready to master compliance. Subscribe for weekly fintech breakdowns, and let's get into it.
The 2025 fintech boom: why compliance is your edge. It's October 2025, and the US fintech scene is on fire. Global funding soared to $44.7 billion in the first half of 2025, fueling 2,200 deals across AI lending, blockchain payments, and more. The spark? A pro-innovation push from the Trump administration. On January 23rd, Executive Order 14178, strengthening American leadership in digital financial technology, dropped, pushing regulatory clarity for digital assets and blockchain. It repealed restrictive rules like SAB 121, freeing banks to custody crypto. The Genius Act is boosting stablecoins, aiming to make the US a global fintech hub. Then there's the Stargate project, a $500 billion AI infrastructure play by OpenAI, Oracle, and SoftBank. Its Texas data center went live in September, supercharging fintech tools like fraud detection and personalized investing. But here's the reality check. Regulators aren't chilling. The SEC filed dozens of enforcement actions in early 2025, even while dismissing some crypto cases to focus on fraud. Last year, SEC fines hit $8.2 billion, and 2025's pace is relentless. Compliance isn't optional, it's your superpower. Let's meet the regulators.
Who's watching? The 2025 regulatory lineup. Fintech compliance is a gauntlet of federal and state regulators. Here's the 2025 lineup. SEC and FINRA. They police investment platforms, robo-advisors, and tokenized assets under laws like the Securities Act of 1933. Big update. April's SEC guidance demands blockchain firms disclose AI and data risks. Pro move? The SEC dropped cases against Coinbase and Kraken in early 2025, shifting focus to fraud over blanket registrations. CFPB protects consumers in buy now, pay later and earned wage access, enforcing the Consumer Financial Protection Act. OCC, FDIC, Federal Reserve oversee bank fintech partnerships and banking as a service, or BaaS. Watch out, FDIC cracked down hard with 45% of BaaS programs under formal actions by May 2025 for compliance gaps. FinCEN rules AML via the Bank Secrecy Act. You're on their radar. The FTC tackles fraud and privacy. The CFTC handles derivatives. States pile on, requiring up to 50 licenses for money transmission or lending. Bright spot? Sandboxes in Arizona, Florida, Nevada, and others let you test without full licensing. Federal innovation hubs, like the SEC's Strategic Hub, are also open for dialogue.
2025 rule updates. What's new and why it matters. 2025's updates aren't about new laws. They're about operational maturity.
AI integration, and real-time oversight. Let's break it down with data and case studies showing the stakes. AML and KYC, no hiding. The AMLA of 2020 and Corporate Transparency Act require beneficial ownership reporting and enhanced due diligence. FinCEN's BSA demands customer ID programs and sanction screening for MSBs. Cryptos under a microscope, stakings often tagged as unregistered securities. Update: August 4th, FinCEN flagged crypto kiosks in scams, pushing AI-driven transaction monitoring. Case study: offshore crypto crash, February 2025. A Seychelles-based exchange pled guilty to unlicensed money transmission, forfeiting $10 million after FinCEN traced $50 million in scam payments. Crypto SARs spiked 30% in H1 2025. Takeaway: real-time OFAC screening could have saved them. Data privacy and cybersecurity. Fortify your defenses. No federal privacy law yet, but GLBA safeguards financial data, and 19 states, like California with CCPA, demand opt-outs. New York's 23 NYCRR 500 requires incident plans and penetration tests. April's SEC rules mandate AI and data risk disclosures for blockchain firms. Emerging AI regs target bias in credit scoring. Case study: Coinbase's 15 million breach. May 2025, a vendor hack exposed 100,000 plus user records, triggering a GLBA lawsuit and $15 million in costs. IBM's 2025 report pegs average breach costs at $4.88 million. Pro tip: vendor audits and encryption cut risks by 40%. Consumer protection and UDAP, keep it fair. CFPB enforces UDAP in buy now, pay later and earned wage access, targeting dark patterns and biased algorithms. ECOA bans lending discrimination. In May 2025, CFPB eased BNPL enforcement, cutting exams 50% after its 2024 rule treating BNPL as credit cards. Case study: a firm's $2.5 million lesson. In 2024, CFPB fined a firm $2.5 million for ignoring 1.2 million BNPL disputes, forcing $24 million in refunds. Their AI overhaul slashed complaints 40% by 2025. Lesson: TILA disclosures are your armor. Crypto blockchain payments, stablecoin surge. Trump's EO pushes stablecoins via the Genius Act. MSBs need PCI DSS for payments, Section 1033 for open banking APIs. FINRA Rule 2040 limits transaction-based pay. Case study: PGI Global's $198 million scam. April 2025, SEC charged the founder with a $198 million crypto Ponzi, pocketing $57 million. DOJ followed with restitution orders. Unicoin also got hit for inflating sales from $110 million to $3 billion, settling at $37,000. Takeaway: transparent promotions or face the SEC's wrath. Licensing and funding, scale right. Non-banks need state licenses. Reg CF allows $5 million crowdfunding raises. Boss partnerships demand due diligence. Case study: FDIC's Boss Smackdown. August 2025, a bank got a $5 million cease and desist for AML lapses in fintech ties, flagging 200,000 unchecked transactions. Post-action, 60% of Boss firms adopted shared dashboards, cutting violations 25%.
Your 2025 Compliance Playbook. Regulators want compliance by design in 2025. Here's your playbook. Startups: map activities early. Payments need MSB status. Use self-assessments for exemptions. Build maturity with AI-driven KYC and written security plans. Kraken's proactive talks with the SEC saved $30 million in legal fees. Sector tips:
Lending, secure licenses, nailed disclosures. Crypto, sanction screening is non-negotiable. BaaS, audit partners quarterly. Big players, sync legal and tech teams, scale with flexible systems. Use RegTech for real-time reporting. Dashboards are your friend. Risks to dodge in 2025? Risks are spiking. SEC's Cross-Border Task Force, launched September 2025, hunts foreign fraud. Mitigate with audits, bias documentation, and RegTech partnerships. Wrap up. Compliance fuels growth. That's your 2025 FinTech Compliance Crash Course. From Trump's EO to FinCEN's crackdowns, it's a high-stakes game. But smart players, leveraging sandboxes, automating controls, auditing partners, are capturing a $1.5 trillion market. Drop your biggest compliance question in the comments. We read every one. Like if this saved you a headache. Subscribe for weekly FinTech intel and hit the bell. Thanks for joining us. Go build, stay compliant, and dominate 2025.